Christian, good to have you here. Could you say two sentences about what you and Delin Capital are doing?
Nice to be here. We launched ourselves in September 2012 after having raised 200 million euros of equity to invest in prime big box logistics assets in the Benelux and in the UK. We're looking to create a 10 to 12 total return with good cash on cash distributions year on year, and we'll be using 50% leverage to create a 400 million euro portfolio. To date, we have acquired 14 assets and 300 million euros, which is split basically 50-50 between the UK and the Netherlands.
You are active in logistics.
We're purely focused on logistics in the UK.
Is logistics becoming an institutional asset class already?
I think so. I think it is an institutional asset class already. Certainly when I look at the competitors, when we're bidding on things, there are big pension funds, big insurance companies, and that is, logistics still offers a yield premium relative to other asset classes, and I think that is what is driving some of this investor demand. People are simply looking for good yields. But the drop in cap rates we've seen in the last 18 to 24 months has been quite remarkable. And I think the only way one could justify that sort of pricing is if one believes in sustained rental growth. We are not deviating too much in terms of our return criteria. We are looking to buy in 7+ cap rates, which is making it increasingly challenging to find value here in the UK. But I think if you look on the continent, that there are some more obvious value opportunities potentially.
So what are your investment criteria?
We are looking for a location, prime locations which benefit from multimodal transport. We are really concentrated on what we call sustainable demand for those from the occupational side. So anything that's too bespoke for a specific occupier is probably not what we would like. We want very standard assets that could appeal to a range of occupiers in locations with hard to replicate infrastructure around transport.
When we think about logistics, quite often refer to warehouses, especially in the age of e-commerce and
they are warehouses.
E-retail. Is the warehouse the modern shopping center?
I mean, it's obviously not quite the same thing to visit, but in terms of delivering goods to people, of course, e-commerce is continuing to take an ever-increasing share of the retail wallet. And I think there is certainly an argument to say logistics is the new retail, but it will not replace retail. People still, human beings are still social people. They want to go to these destinations. They want to enjoy maybe some leisure activities as they're doing their shopping. So I think what you'll see is that the big, well-located shopping centres will go from strength to strength, the sort of destination shopping, as it were. But then a lot of the kind of smaller, mid-tier, kind of high street type retail offerings may suffer from e-commerce. Certainly we feel one of the big motivators for us investing in logistics is that incremental demand that we see coming through from that increased penetration of e-commerce.
Where you already said in the UK it's difficult, it's getting more into getting competitive. Where do you see the next opportunities? You're looking into Europe, or you're active.
Well, the UK is competitive, but it is still a very liquid, deep market. And so, whilst it's difficult, there are a lot of opportunities to assess, and that is a positive thing. I also think in the UK, there has been no development for about 5 or 6 years, and so there are some good opportunities potentially around development. But outside of the UK, you see a slightly more mixed economic picture across Europe, and I think there are opportunities to perhaps be a little bit ahead of economic growth. If one considers economic growth as the biggest driver of commercial real estate, one wants to then look at economies where the recovery has yet to kick in and yet to filter through into investor expectations, and that would then be a good time to buy. And then once the economic growth filters through and people's expectations start to rise, then you'll start to see cap rates moving in expectation of that growth. So for us, it's about trying to stay one step ahead of the herd, I suppose.
Final question: where would you see is more of a challenge? Is it raising capital or is investing it?
I think both are challenging in their own ways, but generally I would say raising capital will be more challenging than investing it. Despite everything I said earlier, I still think there are opportunities to do good deals, but clearly getting people to part with their money and give them to sort of relatively new managers such as ourselves, that is probably the bigger challenge.
Christian, thank you very much.
Thank you.
Thank you.